I am super excited to talk to you today about how investors, home buyers, and even first time investors can purchase properties with the intention of adding up to three additional units onto the property, taking a single family home and turning it into a fourplex for cash flow. What's important to understand is we're not only talking about ADUs, but we're talking about SB9 units. That's right, not just lot splits, but the 2021 law SB9 allows us to add multiple units. What is the difference? Well, ADUs and SB9 units can look exactly the same, but what SB9 says is that all single family zoned properties, not duplexes, not triplexes, but all single family home properties may have a second house, which we call an SB9 unit, and two ADUs. Now, all of this can look and feel like the same exact house. They can look identical, but it's how you permit that. And that really matters because financing is much, much easier on an SB9 unit. We're allowed to factor in future rental income and you get 100% of the square footage appraised. ADUs generally do not, although we do have some fantastic workarounds to figure that out, and that problem is being solved over time. The other benefit about SB9 units is they can be much bigger than an ADU. In fact, their minimum size is 800 square feet, but the major difference is fire codes. You got to add fire safety sprinklers and equipment to an SB9 unit, unlike an ADU. But everything else is supposed to be pretty much the same. So, and I want to remind you that loans are just tools. So, we're probably going to do this in phases. The first part is the purchase. We're probably going to do a classic purchase with a low rate. We might do a buyer or a seller credit to buy down the interest rate for 6 months to a year, keep your monthly payments done. But ultimately, then once you buy, you're going to start designs and permits, and then we do a renovation loan of some kind to finance it. The job of that loan is to finance 100%, no down payment, no out of costs. And then finally, in most cases, we refinance into that nice low interest rate, that classic 30-year fixed, and then some people actually cash out and go buy their next properties. The timeline is very collaborative and simultaneous. We get your whole loan pre-approved and strategized upfront. We even go through pre-underwrite the whole thing to make sure that everybody's comfortable in the process that we're doing and that the numbers make sense. In that process, we can potentially get you that ADU grant right after you purchase, and that can help pay for designs, which take 2 to 3 months, and permits are taking 4 to 8 months. Once we're pretty close to permits, we're going to start the renovation loan here, and our goal is to fund that renovation loan when the permit is received here. Whoops. And you're ready to start work. And construction typically takes 4 to 6 months, and then you are getting some rent. And this is where it might make sense to refinance if the rates are better in that way. Sometimes they're not, just depends. The sweet spot, what you need to know about purchasing your house and renovating is everything has to be done within your county loan limits. The purchase loan and the construction budget has to be less than the loan limit or what you are approved on. And you can see your area loan limits, and they've gone up pretty considerably. So, how does this work? So first, you start with the purchase loan. Now, I'm not talking about the purchase price because a purchase price could be determined by how much down payment, 5%, 10%, so on. In this example of a single family home in San Diego County, we have a 977,500 loan limit. And assuming that you're approved for that whole amount, you might buy a house of 650,000, just a $32,000 down payment, not bad, 5%. You can, first time home buyers can do 3%. But at 5%, that gives us a 617 loan amount. So, sorry, 879, that was the old loan limit, minus 617 gives us a budget of 261. And that ought to be enough potentially. And at the higher loan limit, it's even more. It's another 100,000. So that ought to give us enough to build a junior ADU, maybe from the garage here, converting this into a nice little one bedroom. Maybe you have a door here or a door to the side for some privacy. And this house, which is on the market right now, also has plenty of space in the back to add a detached ADU. Maybe you add on to this little area and so on. But these houses do exist all over on the market. I see them all the time. So don't tell me you can't find a house for 650. I will find them for you in good areas. Duplexes can add 2 units, and the duplex loan limits actually increase pretty significantly. So in this case, the loan limit for this coming year is 1,126,000 in San Diego County. This one has a unit here, a unit here. It's selling for only 775. So you can add units here, and your monthly payment is 6,754, but your monthly rent is 10,000. So some pretty nice cash flow. And this is actually in a not so great area. So part of the goal is to find places that are really have high rental incomes and so on. And that's the kind of thing we strategize up front. What does an ADU cost? Well, in 2022, beginning of 2023, every 100,000 costs about 695 per month. But as interest rates go down and Fannie Mae is predicting will be at 4.3% next year, now your price per 100,000 is 495. And these are going to rent much, much higher, even at the high interest rates. I typically see a garage conversion about 100,000, maybe less, maybe more, depending. Some of the work you can do yourselves, other needs to be done by a pro. The detached units in southern counties and inland counties, I typically see about 200,000. LA County starting to hit 200,000, but more likely I see 250. In the Bay Area, I see closer to 300. It just depends. But the rent is so much worth it. It's absolutely worth it. Why are these two different? Well, the attached houses tend to share the same foundation slab, so you're not rebuilding the slab, which is really costly. Whereas the detached garages tend to be built on a 4-inch thick slab with no rebar. These tend to be 6-inch slabs with rebar. And so oftentimes these get ripped out because they're not up to permit codes. Also, the roofing and the trussing tends to be done along with the primary house, whereas this one is probably pretty shabbily built and either needs to be torn down or reinforced. So we typically see the larger builds here. So with that in mind, how do you know what a unit pays? Well, I like to avoid the apartment sites. Apartments are a different product and they tend to rent for less. Would you rather live in a box apartment where you can hear your neighbor screaming, or would you rather live in something that feels like your own little single family home? So I go to Zillow. I look for rent right in my neighborhood. Find your neighborhood, exclude apartments, and then look at the number of bedrooms, and then look, what is the average? Oftentimes, I do this because people think that to maximize their rental income, they need to build this great big, 1,200 square foot 3-bedroom unit. When in fact, oftentimes I see a 1-bedroom ADU duplex, one bedroom is much more cost effective and even a higher rent than what you do with a bigger design. So that's the kind of thing you want to look at. Bottom line is, these are the types of numbers that we are going to go over right up front before you spend any money. We get you pre-qualified. We're talking about the area where you're looking in. You will know what everything is, and you know ultimately when your final refinance is, whether you cash flow, what the future value is, what the rates are, and so on. This was on a duplex that somebody is purchasing right now. When you go to purchase, of course, you have no equity, putting 3% down, 5% down. And so a lot of times lenders don't have renovation lending, and it's really great. Renovation lending is a first or second mortgage. There are no standalone construction loans, and it's based on the future appraised value. Quite literally, we send the appraiser out, we show him the pretty architectural designs and the floor plans, and he says, "Oh, I see what you're going to build. Instead of it worth being 700,000, it'll be worth 800,000." And in this example, renovation lending shows you how it can create a bigger budget. If a current value is 700,000 and I multiply that times 80%, that's the cash out value. Our regular HELOCs go up to 90%. And let's say I have a $450,000 current mortgage, then I only have 110,000 cash available. But let's say you go and buy a $700,000 dollar property. Let's say the appraisers give a lowball value on your plans. Even so, I can lend up to 95% and even 125% of future value. And that gives me a much, much higher budget to work with. And that's more than plenty to build a junior ADU, an ADU, or SB9 unit. What's different about renovation lending, and one of the reasons why most banks and credit unions don't even know about them or do them, is because they are hard loans. What's hard about this is we're required to do construction oversight. And by the way, that's good protection, not only for me, the bank, but for you, the homeowner. We have guys called HUD inspectors, and I have my favorites, and it's their job to oversee construction, and they're the ones who authorize payment, not you, not me, to the contractors as work goes. I love this protection. If you're like me, I walk into a mechanic or a GC, a general contractor, and they say, "Oh, sweet, this woman has no idea about construction costs, anything." And they'd mostly be right. So my HUD inspectors, I actually use them personally on my investment projects, and it's their job to say, "Hey, bub, you got to build this right. You got to get a better contract, more detail on this section and this section," and they will make sure that your project's going well, that you're getting your money's worth out of the contract, and that your project is ultimately permittable. They're super nice guys, but they're there to protect you. While you are working on your ADU and SB9 unit, you can rehab the primary home. And this is a great time to do it. You got guys stomping on your yard, you're doing this big loan. So it's a good opportunity to fix up the entire area. One of the big things I see is solar. A lot of people want to separate the utilities. For the same price or less, you can add solar to the whole unit and just include utilities, raise rent a little bit and include utilities. Renters really love that, and if you're living there, now your renters are paying for your utilities, which is great. The ADU grant. It is offered by the California Housing Finance Authority. It is $40,000 max. It is sometimes available, sometimes not. And it's changing all the time. But for owner occupied homes, not rental homes, but owner occupied homes, we can help you get the ADU grant. What they do is they use the same renovation oversight process as I do on my renovation loans. They even use my HUD consultants, and they escrow all the funds and oversee construction to make sure that it actually gets built. They don't want to give out the grant and then not have the product built. Then you got to pay the grant back. For professional investors, we also have a professional investor rehab loan. This is the same loan product as my fix and flippers use, and it's a great product. It's interest only. You only pay on what you use, but instead of using a HUD inspector to oversee construction, what they simplify it. So you have to have 25% of the construction budget in liquid cash, and you pay the contractors and then submit for reimbursement to the bank. It is a max 18 to 3-year term, and then they want you investing out of it. You can tell construction is a very risky loan for the bank, so there's a lot of oversight, a lot of protections for the bank. By the way, you don't have to be a professional investor to do this. New investors are welcome. Tips and tricks, run the numbers first from the beginning, and then you know what you're doing, you know what you're buying, and you can design appropriately. Use ADU specific contractors. If you don't, it's a great way to have your permits take 15 months to 2 years. Know that appraisals don't always come in clean. The appraisal guidelines are fuzzy, and I've seen an average appraiser give a 1,200 square foot ADU with 3 bedrooms a $0 value. Conversely, we are the only bank out there that has trained appraisers. I'll give you an example. One of my investors basically split a very large house in Burbank. He bought it for 1.4. An average appraiser gave him bought it for 1.3. The average appraiser gave him 1.4. After splitting it, my appraisers gave him 1.9 million in value. So it's a huge difference on those appraisal values. Stick built versus prefab, about the same in my view. They appraise about the same. Great products. It's just personal choice. What's really important is do not run out of cash. The black hole of lending is when you have a half built project and you run out of money. At that point, you're looking at personal hard loan money, and that's just not pretty. It's very expensive. And beware of low bids. My biggest problem is guys, contractors who try to win the bid by lowballing it, or because they simply don't know the costs of an ADU, and then you end up rating your retirement account for the 25,000 they missed or forgot about or whatever. So your next steps is check out the ADU estimator at aduloans.net so you can start to get a sense of what costs are and so on in your area, and book time with me. We will go over the numbers, work up your spreadsheet, and get you pre-approved so you can start shopping and plotting and scheming. I look forward to working with you.